What's up, family? Demetrius Harris here. If you own a construction company and you've ever lost a job because you didn't have enough cash for payroll, materials, equipment, or you're tired of waiting 30 to 90 days to get paid, this video is for you. Because today I'm breaking down construction company funding 101. How to get approved fast, step by step, and I'm going to show you what lenders actually look at so you stop guessing and start getting approvals. Here's the truth. Most contractors don't get denied because they're bad businesses. They get denied because their file isn't fundable yet and nobody told them what to fix. So in the next 20 minutes, I'm going to cover the exact approval checklist, the fastest funding options for construction companies, how to avoid the most common deal killers, and how to position your business so you can get funded repeatedly, not just one. If you want more content like this, subscribe, hit the notification bell, and like this video because it helps other business owners find it too. Let's get into it. Before we talk approvals, let's talk denial reasons. Because once you understand this, you stop taking it personal. Here are the top reasons construction companies get denied. Number 1, inconsistent revenue or a lumpy deposit. Number 2, low average daily balance in the business account. Number 3, too many negative days, overdraft, or a balance going near zero. Number 4, too much exiting debt relative to cash flow. 5, thin business profile, no strong online presence, no business setup. 6, credit issue, personal or business. 7, industry risk plus paperwork gaps, no contract invoices or proof of work. And construction is unique because you're often paying out before you get paid. You got job-based revenue, not subscription revenue, and you may have seasonal shifts. So lenders want to know one thing: can this business handle payments and still operate? Let's quickly break down the main funding categories so you know what's realistic. A, capital, working capital, short term. Good for payroll materials, job, startup costs. Approval is usually based on bank statements and revenue. B, line of credit. Good for flexibility, recurring cash flow gaps, but best when you want funding available without reapplying every time. C, term loan. Good for bigger projects, expansion, long-term stability, usually needs stronger credit and time in business. D, equipment financing. Good for trucks, heavy equipment, tools, often easier approval because the equipment is tied to the deal. E, invoice, contract funding when available. Good for bridging the gap between work and payment based on the job paperwork and who owes you. The key takeaway: if you want approvals fast, you want the option that matches your current profile, not what sounds the best. So, before you apply, know monthly gross revenue lasts 3 to 6 months. Average bank daily, your average daily bank balance, any negative days or overdrafts, total business debt payments, your credit range, even a rough idea. Now here's a pro tip. Approvals move faster when you can speak the lender's language. Bank statements are the number one thing that can make or break you. Lenders like to see consistent deposit. Weekly or bi-weekly is great. Healthy ending balances. No overdraft. Less cash out. Personal transfer mixed in. Quick fixes you can start today. Route all job payments into one business account. Keep a buffer, even $2,000 to $5,000 helps. Avoid letting the account hit the near zero. Reduce random withdrawals. Pay yourself constantly instead. If your statements are messy, you can still get approved, but your options may be smaller or more expensive. Now, this matters more than contractors realize. Basic fundability checklist. Business email, not Gmail if possible. Professional voicemail. Website or at least a clean business page. Matching business name on your bank account, invoices, online listing, business license where required. You don't need to be perfect. You need to be verifiable. If you want approval fast, keep these ready. 3 to 6 months bank statements, ID, articles, EIN if asked, a recent invoice or contract if requested, a voided check sometimes. The faster you upload, the faster you get offers. Here's how smart construction companies apply. They apply once through a platform that matches them to multiple funders. They don't spam 10 lenders and tank their options. They respond quickly and choose the best offer. And here's a big mistake. Applying when your account is at its lowest point. If possible, apply right after you've had your strongest deposit cycle. Let me simplify this. Lenders are scoring your business on, number 1, revenue consistency. Number 2, cash flow strength, not just revenue. Number 3, bank behaviors, overdraft, negative days, volatility. Debt load, how much you already pay monthly. Time in business, industry and job type, credit profile depends on product. If you want approvals fast, focus on what you control. Clean banking, better deposit, strong documentation, strong business presentation. Here are fast ways to boost approvals. Keep your business balance above 0 daily. Deposit payments directly. Avoid cash only patterns. Separate personal and business spending. Reduce overdraft for 30 to 60 days before applying. Keep your paperwork ready in a folder on your phone. Even 2 to 4 weeks of cleanup can change your approval range. So, that's Construction Company Funding 101. The step-by-step way to get approved fast and what lenders really look at. Now, if you want me to help you figure out what you qualify for and match you with the best option based on your current bank statements and business profile, there's only one thing you need to do. Check the link in the description to apply and see your options. And if this video helped you, do me a favor, like, subscribe, and hit the notification bell because I drop real business funding and business growth game for contractors and business owners every week. Comment funding if you want me to make a follow-up video on funding with low credit, funding for new construction companies, equipment funding, or how to get a business line of credit the right way. Demetrius Harris here. I'm out. See you in the next video.